So, my market update. Let's go through kind of what's happened. As I was doing this, I looked back at some of the stuff we talked about through March and April, and I wanted to bring back some of those old slides to see what the world was thinking then, and then what actually happened, right? So back in kind of March, April, we were getting all sorts of stuff. So this is some numbers that came out from DBRS Morningstar, which is a credit agency, saying that Toronto is way overvaluated. We're going to see drops in prices happening, and COVID is going to be the precipice for this, and we're going to have 14 to 18% drops happening over the next 3 years in price. That same week, TD Economics came out and said, there's still high demand. We're going to see Toronto home prices increase, by the end of this year, by about 7.8%. So what actually happened? Well, if you've been paying any attention at all to what's been happening in the housing market, TD was correct, and they were low. So what we've actually been seeing, this is from TRREB's July housing report, but the home price index, which isn't just average price, right? I talk about this all the time, but it's like for like properties. So looking at, let's say, 2-bedroom condos or 4-bedroom homes, the entire composite benchmark has up by 10% year over year in July, right? So we're seeing a price increase happening, and have been seeing a price increase happening even through COVID. Overall selling price is up, almost 17% as well. So, the kind of the doomsday sayers that came out in the beginning of when COVID started to hit, they were pretty off the mark. And those who have had more detailed conversations with, the reason that COVID didn't impact the housing market like I think a lot of people thought it would is because it's not a localized phenomenon. It's very different from, let's say, when oil and gas isn't doing well. When oil and gas isn't doing well, people exit the local economies which are supported by oil and gas. Calgary, Edmonton, there's emigration happening from those areas. But with COVID, you're not running away from anything. If you're in Toronto, or you're in Hamilton, or you're in Calgary, or you're in the US, it's a global pandemic, and it's not causing net migration out of these like countries or major urban areas, right? I'll talk a bit about kind of what's been happening with the flocking to the suburbs or whatever that are getting into the headlines these days. But in terms of actual numbers, people aren't moving from Toronto to Edmonton because of COVID. So the demand hasn't disappeared. While immigration is a bit on pause right now because we're limiting movement in and out of the country, the population hasn't changed. And the population is, the fundamental when it comes to the demand side of the supply and demand equation in real estate and real estate prices. So unless population is changing, then we're not seeing this decrease in demand. And that's supported very heavily by the numbers. So, I just touched on here that average home price is up. And if you draw a line there across the July 2020, it is pretty much the top, right? We haven't seen average resale home prices this high in the last 4 years now. And sales volume is up as well. So not only are transaction prices high, but there's lots of sales happening as well. It's not a small number of sales that's driving these high prices. Listings are also they're not miserable, they're not great, but they are probably, I would say, better than average in terms of what we have for supply within the city. And so when we look at our ratio of home sales to new listings, and this is what really is, this is our supply demand ratio, right? there's only 1, 2, 3, 4, 5, 6, 7, 8, 9 other periods that you had higher sales to listing ratios. So, basically a short way of saying is that the demand is still there. People haven't moved away from the city, and they're still looking to buy properties within the city. Even if we've got listings to support it, even though prices are expensive, demand still exists in the city. The other place that I've, kind of added on, because we've got more questions around these days, is what's happening with rents. And it's something that we're really going to focus on later. And our guest speaker tonight, Jin, is going to dive a lot more into is, what are we seeing in terms of rents within the city? So rents are down, right? We see here, this is all the major urban areas, within Canada, and we see a decrease of rents year over year for July 2020, down 8%. Okay. Interesting data point, but if you're a sophisticated investor, if you follow what we do here at Volition, we know that interesting data point, I need more granularity to really understand what's happening, because Toronto and the Toronto real estate market is massively diverse, and it's over 6 million people, and it's over a huge area. So what's actually happening? So we dive further into it. Let's go, postal code by postal code is kind of the next thing. Let's get more granular there. And this is average price per square foot, and this is by postal code, and this is the year over year changes in pricing that we're seeing. So you'll see here, some pretty big drops in and around the financial district, and probably just south of there, kind of the M5E area, right? Those are like 22% drops in price per square foot. Okay, so it looks like the average is being driven quite heavily by, one or two of these, area codes. What's in those area codes, right? What kind of properties exist there? If you're familiar with Toronto, you know that here, this is like condo central, right? You're not getting lots of condos that are, being built out, in the further reaches of the city. They're mostly in the downtown core. And, what we've been kind of talking about over the last couple of months is that it's been this influx, and I have it highlighted here, this influx of units, which were originally short-term rentals. So people who are using Airbnb or VRBO or whatever it happens to be to do short-term rentals. When policy changed and the allowance of Airbnb was shut off, you had a flood, right? A flood of new rentals coming on the market, and in particular, condos were hit. And this is what we're seeing. So massive increase in supply almost overnight. There is to a lesser extent, there's new apartment completions, right, that are happening. So there are several dedicated rental properties, rental buildings, which have been slated to come on over the next, 5 to 10 years. We're seeing the first crop of these coming on the market. That is adding to supply. And then on the other side is cancellation of every downtown in-person campus class. So the demand for student housing at the lower end of kind of the rental units is disappearing as well. So that's really what's impacted quite heavily on the condo side. And Ed will get into, like, I always like to say we take the big picture and then we kind of drill down. But all the data that I'm talking about is always at best 1 month lag, because our data is always going to be kind of 1 month delayed based on the availability of the information. But 1 month is actually a long time in this market. And what me and Ed and Sam see is what's happening right now, and we're starting to see a little bit of a shift. And I'll let Ed get into that a bit later.
I was, if you don't mind me, I just want to say about the previous slide. If you notice, some of the areas, they get affected a little bit more than others. And there's some areas that are known to be Airbnb heavy condos, namely some of the ICE condos, some of the condos on Front Street. And when those basically shut down and their bylaws changed, basically disallowing any Airbnbs in the condos, like Ming said, a massive amount of rental properties came on the market at once. You'll see hundreds of listings there.
Yeah, I think it was like ICE, correct me if I'm wrong, I think we saw like, what, 200 plus listings
Right?
in a 48-hour period?
Yeah,
Come on.
and those condos are not great condos to begin with. So people are just, they have to adjust their price due to the massive increase in supply. I mean, will this last in the long term? Like my predictions are most likely not. But it's like a new condo. When a new condo comes up, everything gets rented out for a discount. This is the case, except on a larger scale.
That kind of, it touches on, I'm going to talk very briefly about something you mentioned there. And it's the difference between an influencer and a fundamental, right? Policy change, like what we're seeing happening with short-term rentals, are influencers. And the reason is, if tomorrow, COVID's gone and travel happens again and they're allowed to open up Airbnb, you can, bet your every dollar you've got that people who are wanting to rent out on Airbnb will go back to renting out on Airbnb because their cash flow is better. So as soon as the policy changes back, or as soon as the short-term rental ban is lifted, state of emergency is gone, people are going to want to go back to that. That rental supply is going to disappear again, and it's going to disappear very, very quickly. It'll be an overnight because it's a policy change, and unless they do some sort of phased approach, right? But it's not a change in the fundamentals, which would be, let's say, population, right? Population isn't changing, but how population can use the rental supply can be very easily changed by this policy. So when policy changes, and you can bet they will allow short-term rentals back in some capacity, you'll see again a shift happening in rental prices.
So Ed, what were some of those condos that you, Ed's sort of our short-term rental expert, what were some of the condos that you were seeing impacted? You'd mentioned ICE. What were some of the others?
Maple Leaf Square.
Yeah.
Right? You saw 300 Fronts.
Yeah, for sure.
Yeah, it's like all these like condos in the core. They got affected by not only a lot of vacancies due to. I'll touch on that a little bit, maybe more in the next few slides.
Okay, cool.
Let me finish for a second.
Yeah, and the other thing for us to drill into, we're kind of picking on condos here, but let's actually look at the property types and see what's happening with those various property types that are in the rental pool. So this is kind of, the three that are easily tracked right now: townhouses, condo apartments, and rental apartments. And the difference between condo and rental is condo is like, the condo that you know and love. Rental is a dedicated rental building. You can see here that, the doomsday headline of 8 straight months of rental prices decreasing only actually applies to condos. They definitely have been affected, and they have been affected the worst. You're looking at an average rent there for a condo of about $2,600 in January, dropping down to about $2,300, right? About a $330-ish price difference over a 7-month period. Versus if you look at townhouses or even dedicated rental apartments, it hasn't been as clear of a story. There was actually a bump up in townhouse pricing April, May, June, and rental apartments have been starting to swing back up again as well. So it depends on the property type that you're invested in as well. I always tell everybody, don't just look at the headlines, dive into the data. And I think when you're trying to understand rental price impacts, it's not just, it really isn't about the headlines, because they're a great headline. People have been complaining about high rental prices forever in Toronto. So when they see the opposite, man, those are clickbaity headlines for sure. So it's a good headline, but it's not telling you the whole story. Definitely there has been impact, but it is very focused impact that we're seeing.